How does the purchase agreement protect my down payment? Have you ever wondered how a purchase agreement can safeguard your down payment when buying a home? Let's break it down in simple terms. A purchase agreement is a legally binding contract between you, the buyer, and the seller. It outlines the terms and conditions of your home purchase. One of the key elements of this agreement is the earnest money deposit. This is a good faith payment that shows you are serious about buying the home. This deposit is held in escrow by a neutral third party until the closing of the sale. The agreement will specify the conditions under which this deposit can be refunded or forfeited. This means if the seller does not follow through on the contract, you can recover your deposit, which usually counts toward your total down payment at closing. The purchase agreement also clearly states the scenarios where your down payment or earnest money can be refunded. For example, if a home inspection uncovers major issues, or if your financing falls through under agreed conditions, you may get your money back. On the flip side, it also outlines penalties if you decide to back out without a valid reason. This clarity helps both you and the seller understand your rights and responsibilities, which can reduce disputes over the down payment. Another important aspect is how your down payment funds are managed. Typically, these funds are held in an escrow account managed by a neutral party, like a real estate attorney or settlement officer, until closing. The purchase agreement governs how and when these funds are released. This setup protects your money by ensuring it is not released prematurely or improperly before all conditions are met. Additionally, banks and credit unions requiring a down payment to minimize their risk and show that you are invested in the property. The purchase agreement formalizes this commitment, which supports your mortgage application process. A well-structured agreement reassures lenders that the transaction is legitimate and that your down payment is secure as part of the purchase price. Some lenders even offer down payment protection insurance linked to the purchase agreement. This insurance may reimburse a portion of your down payment if you need to sell the home at a loss within a certain time frame due to unforeseen circumstances. The terms of the purchase agreement are crucial for determining eligibility for such protections. In summary, the purchase agreement protects your down payment by legally binding both parties, outlining refund and penalty conditions, ensuring secure handling of funds through escrow, and reinforcing your financial commitment to lenders. This framework helps safeguard your investment during the home buying process and supports the mortgage lending requirements of banks and credit unions.